Hi, everyone. My name is David Kosmeter. I'm the creator of TimingResearch.com, and this is the Crowd Forecast News, episode number 158 for October 23rd, 2017. Today we will be discussing the 213th weekly report, and that'll be on the screen in a minute. If you haven't had a chance to take a look at this yet, just go to TimingResearch.com, and you can download the PDF there. For those of you watching live, you should be seeing the YouTube page that has the live chat section. If you want to, if you have any comments or questions during the show, just post them there, and we will get to those. I have Dave Landry back to moderate today, so I'm going to go ahead and turn it over to him.
Thank you, David Kosmeter, and thank you to Timing Research for having me back to host once again. Dan, let's go to you first. Dan Passarelli of MarketTakerMentoring.com. Tell us a little bit about yourself. And tell us a little bit about MarketTakerMentoring.com.
Sure. Thanks, Dave. Yeah. Well, my name's Dan Passarelli. I've been in the options business for, I don't know, about 24 years or something. I was a trader down on the floor of the Chicago Board Options Exchange for a good part of my professional trading career. Trade a little bit on the Board of Trade and CME group as well. And in 2008, I started Market Taker Mentoring, and we provide education to both retail and professional traders across the world. We've got students in 50 countries. And I'm glad to be here and glad to be chatting with all you folks today.
Glad to have you and welcome aboard. First time. We'll take it easy on you. Don't worry too much.
Thanks.
Rob, let's go over to you. Rob Hoffman from BecomeABetterTrader.com. For those of us who don't know you, Rob, tell us a little bit about yourself and a little bit about BecomeABetterTrader.com.
Sure. Well, good afternoon. It's great to be here with you, Dave, Rick, Dan. Great lineup, great group of people here, and on behalf of David with Timing Research. So, as we go ahead, we kick off. For me, Rob Hoffman. I guess the important part to know about me, I primarily focus on stocks, options, futures, and forex. So, U.S. based type market structures, and what I offer, live trading room, different things like that, and also nightly commentary for those that have full time careers. The real distinguishing factor is that I do trade live in live accounts, put it out there live in front of people on the screen during the day. So we're in good company with some of the guys that we have, here today as well. There's no substitute for live and live money. So happy to help answer questions offline, but I want to turn the floor over to Rick to keep things moving along for you guys.
Okay. All right, Rick, same thing. Tell us a little bit about yourself. Rick Sadler from Hit and Run Candlesticks.com.
Hey, Dave, how are you? Thank you so much for having me back. I do appreciate it. I'm the founder of Hit and Run Candlesticks. We have two divisions, stocks and ETFs, and then one that is also options. I've been trading. All my bio says 29 years. I've actually hit 30 years now, and we do our best to teach folks, help them with some basics, move them into a little more advanced techniques, mostly trading, and we focus on getting into those double-digit gains, and we might talk a little bit more about that today. Again, thanks for having me here.
No, thanks for being here. Appreciate it. To those of you who don't know me, I'm Dave Landry from DaveLandry.com. I trade mostly stocks, but I will trade forex on occasion publicly. I do put out a trading service for stocks. I believe that you can only predict the short term when it comes to markets, but you can stick with positions longer term if they move in your favor. Longer term trading, a little too risky, not very accurate. Shorter term trading, more accurate, less risky, but something bad can still happen. So I take a hybrid approach to the markets. I also have a daily trading service. And I believe that busy traders make good traders. I think if you're sitting there watching the screen all day and you don't need to, as I often say, and I forget who said this first, I think it was in Market Wizards, be as close to the market as you need to be and no closer. So I think that you could have a life and still also trade. All right, Dan, let's go back to you. First question of the week, and it's going to be a two-part question. It's actually going to be questions 2 and 3 together, or 1 and 2 together, I should say. What direction do you think the S&P is going to head this week? From now, I guess, until Friday's close. and rate your confidence in your answer to that by estimating the probability that you have correctly predicted this week's market's move. And I guess it's from today's open, so that's a little tricky because since the market's already open. But go ahead.
Yeah, I got a little bit of a head start here, I guess, huh?
Yeah.
Yeah, you know, this seems like such a basic and straightforward fundamental question, but man, we could talk about this for hours and hours, can't we?
Yeah.
For this week, I think there's a reasonable chance that the market could be just slightly higher. And I would assess a confidence interval of, call it 55%. Now, let me give you some of my rationale here. Now,
okay. Well, we're gonna ask you that question next. So hang on to that just for 1 second.
Gotcha.
Rob, no problem. No, but what you might want to do if you want to use a share chart, get that shared right now. So when we come back to you, you'll be ready to go. Okay.
Sure.
And you don't have to if you don't want to. A lot of times people like to see the charts, but we'll come right back. Promise. Rob, let's go to you next. Two-part question. What direction do you think the S&P is headed from today's open, obviously, to the close on Friday? And then rate your confidence to your answer by estimating the probability that you have correctly predicted this week's market move. Rob, are you talking? We can't hear you, buddy.
Hey, yeah, Rob, you're muted.
Let's try that again. I had to double mute on the headset and the other just to make sure I didn't bleed over on anybody. So can you see the screen here, Dave?
Yeah, that's great.
Okay, great. So from my perspective, the S&P, the S&P bottom line is I'd like to see it and all of these markets, including the DAX, pull back this week. And my probability is 60% plus. I'm far more in that camp than not for a host of reasons, which it sounds like we'll ask next. So, but this is the S&P on the far left, and I'd like to see that pulling down this week.
Okay, cool. All right, Rick, same question to you. What direction do you think the market is headed from today's open to Friday's close? And then rate your confidence to your answer by estimating the probability that you have correctly predicted this week's market move.
Hey, thanks, Dave. You know, with Rob, I kind of agree. I not only would I like to, but I kind of feel that we're going to push back a little bit. We've been trending up nice, and you know, we break out of support, we come back to support. I mean, overall, the bulls still control this market, but I think maybe we've gotten a little extended here, and then we'll be coming back just a little bit. I think maybe some consolidation, and I would count that as coming back. And I'm going to go with 65. I'll go 65% on that.
Okay. I'm going to stick with up because as a trend follower, and I've been called a trend following moron, I don't try to outthink it. I think we're a little overextended here, but I'm just going to continue to err on the side of the trend. If you've been coming to these shows for a few years, and whenever I pop in the host, you probably think this guy's always bullish. Well, it's because the market's been going up. So I'm just following along. But let's talk about developing events now. So Dan, if you want to go ahead and share your screen. Let's try it. Who needed a screen to be shared? Was it Dan?
No, I'm okay.
You okay? Okay.
Yeah, I don't have a visual aid.
All right. Well, let me ask the question then. I shouldn't have cut you off. We could have killed that bird with two stones, as they say. Let's see. For your answer to question number one, please share what specific reasons you think the S&P is headed. And I believe you said lower this week.
Well, I said probably slightly higher with
slightly higher. Sorry about that.
With almost a 50-50 confidence interval, just slightly above. Well, I consider myself sort of an options purist, you know, and I think there's many option traders who trade strategies that are somewhat volatility based, either long volatility or short volatility. And I think that a lot of those sort of option traders kind of approach the options market and the underlying market sort of in the same nature that the options pricing model is premised upon. The options pricing model is premised upon the concept that nobody can predict the underlying price. Now, I don't necessarily believe that nobody can predict it at all with any degree of success or confidence, but that's a whole lot harder than predicting the volatility aspect of it. And so, Dave, you said, I don't want to overthink it, and I'm with you 100% on that. I was looking for a little bit of a pullback coming into today, which we didn't get what I was looking for. So, now going forward, yeah, I mean, not just playing the trend, but also playing just the statistical nature of the market itself. It's a log normal distribution, has somewhat of an upward bias associated with it just naturally, given the risk-free rates and the risk premium. And so I'm just being a purist. I'm playing the odds, playing the numbers, treating it like a statistician, and like, again, what I would say, a purist option trader.
Cool. Okay, Rob, same question to you. If you want to get a chart up, that's fine. For your answer, please state what specific reasons you think the S&P will be heading the direction you choose.
Yeah, so there's a host of reasons here that are on my mind. Number one, from a political perspective, kind of buy the rumor, sell the fact. We've all been watching this market go up. And by the way, let me just be clear, I'm extremely bullish. We're talking about this week, right? So just to be very clear, I'm much more excited about taking long side trades than I am short side trades in the big picture. But for the purpose of this week, after the big launch off that we had last Friday, which we can see here in the S&P. What I'm looking at is this. We're starting to get details of President Trump's tax plan. Things are, so before we talked about even a 15% tax rate. Now we're hearing that the initial volley is going to be 20% tax rate, as an opening bid, because the House won't even entertain 15%. So that's just one small example. But that old adage that everybody here knows, buy the rumor, sell the fact. We're starting to get some more specifics. We're starting to see a little momentum take place, and some more details are starting to come out. Of course, the market's been going up on the excitement of a tax plan, but now we get the details. We'll see how that follows through. From a technical perspective, with that push up, I tend to look for those types of loss, because when the market's slowly inching up, traders don't believe it. And so what happens is we're slowly inching up. The market pulls back. Oh, good thing I didn't go long. The market's going to go ahead and go down. Oh, then it starts bleeding up. Oh, see, I knew it was going to go down. Oh, there it is. It's the crash of the century. Maybe I better get short. And then it turns around. Then the very next day, we push off with a wild range, and we start hearing the last couple of days of last week how exciting the Dow is, right? I mean, how many times did we hear about Dow 23,000, whereas nobody's been saying anything about it, especially in mainstream media. You haven't heard a lot about that earlier this year, about how well the Dow is doing, unless it was from President Trump's tweets, right? So the reality is now all of a sudden everybody's starting to pay attention to it, and when my mom starts asking me, hey, what's going on with the market, I get a little bit worried. So the reality is that having that wide range activity going into the close last week, so we're awfully overbought in some sentiment indicators, technical indicators here on multiple time frames, and frankly, the underlying market energy in some of these things, while we're making higher highs in price, we're not making higher highs in some of the underlying market energy, and so that's a negative divergence, which we're seeing on a handful of these different instruments as well. So for all these different reasons, the political, the geopolitical, we also have North Korea on the horizon, and that rhetoric has been heating up. We've got military drills coming up. There's a lot that can go wrong if anybody starts shooting down anybody, accidentally or intentionally. Bad things can happen. That would put a real damper on. That threat's been out there for a while. So it's just kind of in the back of my head, but with the ramped up rhetoric in advance of the drills, the naval drills, that combined with the technical and combined with the details coming out, it means I'd like to see a little pause to refresh, if nothing else.
Gotcha, Rick. You're next. If you want to share your charts, that'd be great. If not, that's cool too. Rick, can you hear me? Is Rick muted?
There we go. Okay, now I should have it up. Do I have a chart up?
Yeah, it looks great.
Oh, okay, Dave. Like Rob, I mean, I'm totally bullish. I think everyone else here so far has been bullish. There's nothing about the SPX right now that looks like we're bearish, but just like, you know, just the progress of moving slowly up, we have these little pullbacks, and you know, the market just goes up like this, and I think we're setting up to move back a little bit, but stay in a bullish trend unless some sort of disaster hits. Right now, today, and I completely understand that we really need to wait till today's candle finishes. I try to be a studier of price. I think price is king of all kings, and right now we may be showing the bears may be starting to step up just a tad to pull us back a little bit, but I do believe the bulls are by far stronger. Also, if we take a look at this chart right here, this is the 4-week new high, new low ratio. And in our trading room, I've talked about this to our members here for the last couple of weeks, but you know, we get up here and you can change the color there. You can see how that we've come right up to this top line, and we've just, every time we hit it, we start pulling back. Now price is sloppy, it moves up, but the overall side, overall, it looks like it's coming back a little bit. And here we've popped up, we've tagged it again, and now price is way down into this area, headed toward an oversold level. But getting there may cause us to pull back a little bit before the bulls start taking it back up like that. So this week, I'm thinking a sloppy consolidation, not necessarily up, but down over maybe today's candle or Friday's candle, and then back up, you know, assuming there's not disaster out in the world. So
okay,
that'd be my feeling on the market.
Cool. As I said earlier, I'm a trend follower. I agreed with a lot of the things Rob said, because we were wedging up in here, and I do a little 1-minute update every day, and then in my longer update that I do to my clients, or for my clients, I should say, I've been talking a lot about this little wedge and bearish development. As a trend follower, I'm not going to argue with the longer term trend, and when a market is at or near new highs, as I said a few minutes ago, I did say it would be nice if we had a little bit of a knockout move. And we did. I wish we'd have had a little bit more of a knockout move. I have a pattern called a TKO, trend knockout, and this is similar to it, but it's a little bit smaller. I like to see a little bit bigger move lower, and what that does is it sucks in the eager shorts, and it also shakes out the nervous longs, those who are late to the game, and a lot of times that could clear the way for the market to go higher. So this is a mildly bullish development. I would have liked to see in a much bigger sell-off last week and then have us pop right back up. But so far, so good. Obviously, we're not going to go up at a straight line. There's going to be some backing and filling along the way, and we obviously little opening gap reversal so far today, so we're not holding those gains that we had late last week. But as a trend follower, longer term, if the market is at or near new highs, I'm going to err on the side of the longer term trend. I would begin to get a little concerned. I have a pattern I call a bow tie, and that's when you have 3 moving averages come together and spread out. It looks sort of like a bow tie. If we bow tie down in this market after all-time highs like the Russell did not too long ago, I would become a little concerned with the market. But right now, S&P 500 right at brand new highs, Russell 2000 just off of all-time highs. The Russell 2000, by the way, to get out of this stupid range that it was in for a year and change. So I still think there's a lot more to go on the Russell, and I don't think it's going to be a straight route higher. I think there will be some backing and filling, especially because we are a little overbought in here. NASDAQ obviously doing pretty good. So just pull it up real quick. And you can see NASDAQ also right at brand new highs. A little bit of a pullback today, obviously. I'd like to see some acceleration in here, though. That's the only thing that has me a little bit concerned. The S&P actually looks a little bit better. But again, without going on and on, as long as the market's at or near new highs, I think you're better off just looking to err on the side of longer-term trend. I'm seeing some gurus come out of the woodwork calling tops, or continue to call tops, I should say, as they have been for a long, long time. And I don't think they're actually trading, because if they were, they would be broke by now. So don't get too caught up in the fear mongering. Take things one day at a time, and then again, err on the side of longer-term trend as long as the market is at or near new highs. Not to beat the dead horse on that. All right, let's move on to the next question. And the next question is, what instruments have you been trading most? What instruments have you been trading the most this year? And that question goes over you, Dan. And if you look at the chart, it's stocks or ETFs, options, Forex, futures, cryptocurrencies, and other.
I've been mostly exclusively in options with a little bit of ETF trading. And now it's time to say why also, right?
Sure. Yeah.
Wanted to make sure. Yeah, I mean, I think the more you trade, and this is kind of illustrated here by exactly what we're doing. We've got 4 people who have been in the markets for a long, long time, and there's a lot of overlap in what we think, but some differences as well. I mean, look, man, nobody really knows where the market's going. And all of us, when we stated what our opinions were, I don't recall anybody saying their confidence interval was above 60%, as I recall. Yeah.
Yeah.
So, with that, options gives any trader or investor the ability to put the odds on their side a lot more, and to put on trades where even if your confidence interval is somewhere between 50 and 60, like all of ours was, you can still set up trades with 75, 80% win rate. And you can put other things on your side. You can put volatility on your side. You can put time on your side. There's just so many advantages. A lot of people say leverage is one of the advantages of options. I mean, for me, sometimes that's an advantage. Usually not, though. Usually I'm doing things that, like credit spreads and time spreads and things that involve all the advantages that options can give you, and not just the directional component.
Okay. All right, Rob, let's go over to you. Do you need me to reread the question for you? Or? Rob must be muted again.
Nope, we're good. I was taking a second there to flip the screen and the microphone. Yeah, no, from my perspective, I can tell you right now that the majority of my year has definitely been focused on the futures, in part of it because I run the trading room, and also what I like to do in the afternoon for myself then when I'm trading is I do a lot of large block shares, 50, 100 contract type positions. For my own private trading there, for the accounts that I manage for myself, my personal accounts. And so what's happening is this particular year, I've gone ahead and been much more of the sleep like a baby mentality. And so I think that from an end of day perspective, the winner is options. The naked equity positions, I'm personally not a real big fan of right now. You always have earnings risk, but in this particular year, if you think about earlier this year, all the things that were going on with the situation for President Trump, it was constantly, is his son the person of the day that's going to bring the market down? Is it him? Is it Russia? All these different political events that we've all but forgotten, because it seems like every day there's always something new that somebody's putting out there. But to some degree that subsided a little bit. But earlier this year, if you recall, we had very rocky, tumultuous days. You'd wake up or you're down, up 100, 200, down 100, 200, pretty rocky ride. And so from my perspective, what I did a lot more of this year in particular is really focusing on things I could get into and out of. And again, by default, I always have a skew towards futures just because I'm doing those each morning in the trading room with people, because I close out my positions. That's kind of one of my claims to fame. I close out my positions before the room closes. So win, lose, or draw, you know exactly what I've done for the morning, which is kind of cool. And so so there's always a skew towards the futures just because of that. That being said, though, just even my personal trade in the afternoon, all I've been doing is moving instead of the morning, which we'll talk about this, I think, in the upcoming question, perhaps. But I've been doing a lot of like NASDAQ and different things like that in the morning, and then in the afternoon I'll switch to high volume S&P type trades. So With that being said, it's definitely skewed towards futures. I think, though, that Dan's got the right idea from a end of day perspective. I think options are a phenomenal end of day type bet because of the various ways that you can hedge your positions and kind of build yourself in a certain amount of protection that some other instruments don't afford. And so I think that that's an opinion piece there, that the options side I think would be better than naked, unhedged equity positions. I think the option side wins the end of the day gamut. And then on intraday, I'm focusing on the futures.
Okay. Rick, same question. And I think you answered the second part of that, Rob. Pretty good there. So let's go to you, Rick. Same question.
Okay, I want to share a screen with you here. There we go. Okay, so at Hit Run Candlesticks, we focus on stocks and ETFs and options. I personally focus on the stocks and ETFs, mostly on the stock side. We by far trade more stocks than we do ETFs. My partner, Doug Campbell, he runs Right Way Options, and on his side, he focuses on the option side. What we put together with it is we truly think price is the king of kings, and we follow price using candlestick signals, support and resistance. We follow that, and then we absolutely believe that trading within the trend will increase just about anybody's productivity in trading. And if you stick by certain rules, what I see is with options you can gain more percentage, no doubt about it. But if you stay within certain rules and you create a trading plan, then it really does give you an upper hand. So I'm not sure that options for myself, but then I'm pro stock. I'm not sure option gives you advantage or stock gives you an advantage. It's all how you approach it with a plan and what rules you follow. We're real big into chart patterns. I absolutely love chart patterns because the money is made when you come out of a chart pattern. The money is made right in here. So we're always looking for a trend with a chart pattern, and then that follow through, that breakout, and then of course trade management. But I think when you add all that together, and if you study price action and you truly believe that price is a king, then I don't know. We just feel there's benefits to options, benefits to stocks. There's always going to be traders that would rather trade stocks or would rather trade options for 101 different reasons. And I think having the ability to trade both is maybe one of the best ways to go. Thank you.
Okay, cool. Yeah, I agree with what you said. Everything works better with trend. I've seen some people use some arcane methodologies and but what they fail to realize is that the trend was in their favor, and when the trend turns and they start fighting a trend, they lose it all and then some. So +1 on that. Determine what's the line of least resistance and getting on board. I trade mostly stocks. I will trade Forex, and I've just kind of dabbled a little bit in more recent times in the cryptocurrencies. I just can't help myself there. But you've got to realize that something, especially Forex, is a very efficient market. You have to pick your spots carefully. With stocks, I can look for a little bit more efficient type of inefficient type of move. For instance, we're in one right now, and obviously not everyone works this way, but we're in one now that's up over 200%. We've been in since January. We started as a swing trade and moved higher, and that type of move isn't priced in. It's going to be very hard to catch a 200% move, obviously, in something like Forex, so you have to pick your spots more carefully. If you go to my store on my website, I make you scroll through the gift shop, but if down at the bottom here, there's free reports, and you click here, there's a report on market efficiency, which will explain that in a lot more detail and why I like to trade the markets that I do. Also, if you go to TimingResearch.com / it's kind of a mouthful, but timing-research-special-offers, and there's some videos there you can sign up for, and then I'll make sure you also get those free reports. There's also, by the way, just to mention real quick since we're here, there's also a $100 promo code you can get here, and you can get all 3 of my books. So get to know me first for free, and then if you like what you see, then you could kind of move on from there. But I like mostly stocks, again, because they are inefficient. Options have a lot of moving parts. I will occasionally use options, but for the most part, I just trade outright stocks. And you just got to be really careful with options and make sure you fully understand what you're dealing with. For me, it's just I'm better off just trading these small cap stocks. IPOs have been in a bull market for the last 4 or 5 years, and they've been a wonderful place to look for opportunities. So within stocks, small cap issues, mostly not micro cap, but fairly small, 200,000, let's say on average volume, give or take a little bit. And then in the IPOs, I go a little bit less because it's hard to get that kind of volume. But IPOs can also offer tremendous opportunities. Okay, let's go back to Dan. And Dan, you have 2 things for everybody. If you have a trade of the week, some kind of trade you think might be worth putting on, you want to showcase that as to a little bit about your methodology, whatever. So start thinking about that. And I'll circle back to you, Dan, if you like. And show that now. If not, or if you have a little trick or tip or something you want to pass on, feel free to do that now. So let's do that now, Dan. If you've got something ready to go. If not, anything you want to tell us, I suppose.
Yeah. Actually, if you don't mind, do you mind if I talk about my ebook? Would that be okay?
Yeah, go ahead. That's fine. That's cool.
Yeah, let me do that. We'll share my screen and share this screen. Yeah, one thing, and I guess this kind of goes a little bit to what I was talking about, just my philosophy of trading and all that. I mean, you can make money in any market, and I've got an ebook here called 3 Secrets to Making Money in Any Market. And I'd love for everybody to have that. We'll call it a parting gift, if you will. You can just simply go to my website, markettaker.com/ebook, or free_options_ebook, markettaker.com/ebook. And I'd love for you to have that. And now let's see here. I can stop my screen share and I can talk about a trade idea here. So yeah, I mean, as far as trades, I mean, here's what I'm watching. I'm looking for intermittent situations where I can sell some option premium. Now that's a little tricky here these days because option premium's very inexpensive. Although in some cases, even though it's the implied volatility is very, very low, in some cases, even though it's low, it's still overpriced, if that makes sense. Kind of like you could buy a really cheap car, but if they mark it up by $2,000 more than they usually sell it, it's too expensive, right? So that's kind of what I'm looking for. Is I'm looking for those situations, particularly in the broad-based ETFs, but also in individual names, where when implied volatility gets a little bit too high, and maybe when a trend either up or down exhausts itself, maybe looking to sell a credit spread with the delta in the opposite direction. So here, if the market does kind of rally a little bit more this week, I might be looking to sell some call credit spreads. If it turns out that we're all wrong and it kind of pulls back just a little bit, I might be looking at selling some puts, put credit spreads, something like that.
Okay. All right, Rob, you have a trade of the week for us?
All right. So if we're taking a look at one thing I'm looking at is Netflix. And so, we talked about this. Just to be clear on the equities side, I want to go ahead and share. My background is equities, of course. I started in the 90s in equities. So I'm a big fan of equities. But what I was just saying was from a risk management perspective this year, I felt like options might be a little bit better for some people. But again, you get yourself in trouble no matter what you're doing in any particular market if you don't know what you're doing. But equities, I think position sizing would be the name of the game for this year. For anything, it's always it's a factor. But from a overnight position hold perspective, this particular year, I've been a little bit more chicken with the political environment we lived in to have a desire to want to have any big positions on overnight in equities. So, but there are some phenomenal opportunities in equities. It's just that position sizing and risk management really become key, and they're always a key. But I feel like this year, with the you wake up or you're up or down hundreds of points depending on the flavor of the day, the risk factor. This North Korea situation obviously opens up a whole nother opportunity, and so on and so forth, of risk. So that being said, I don't want to try to steer people away from equities because that would be kind of hypocritical, because I'm still a big fan of equities in the big picture. So I just wanted to kind of put that out there so people are like, gee, Rob hates equities, because that would not be the case. Now, the second thing is, though, and so with that being said, Netflix is a big thing that I'm taking a look at here. We're at this key $200 resistance level on Netflix, and I've been talking about this a lot in my free nightly videos. And what I've been looking for is to see if we can actually get through the $200 level, pull back to the $200 level, show that it's support, because it's clearly a major resistance level right now. We have this strategy called the inventory retracement bar, and we actually locked in two of those back to back 2 days in a row at that $200 level up here, just kind of solidifying that institutional resistance that's right up in this area. So what I was telling people as we were coming up to the $200 level is like, hey, let's see if it pushes up, pulls back, stops there, and starts to take back off. That could bode very well for Netflix in the days and weeks to come. Unfortunately, what happened here, though, is we did have very high oscillator levels, kind of like we do in some of our U.S. markets right now, and so the market took a much-needed pause. With that being said, I'm going to be watching going into this week and beyond, for that matter. Can we get through this $200 level, push up, pull back, show that its support, starts to take back off again? I think that could be a great offering. And Netflix has got a lot going on. They've recently raised their prices, and I'm actually finding myself. So I kind of look at that kind of the Warren Buffett model. Do I use it? Do I like it? I'm actually finding myself using Netflix a lot more than I have historically as well. So both from a personal buyer purchase perspective and then the technicals here, if we can make that $200 level of support, I'm excited about this one for a long.
Cool. All right, Rick, you have a trade you want to show us?
I do. Let's see. Whoops. What did I do there? There we go. There's the chart I want to show. Cree. I actually bought Cree this morning. Went long on this morning. It started popping up on my scanner, and it just met all my criteria. And on Cree, let me get my pencil out here. Cree, we've got this very nice bottom that rolled in here with a big bullish belt hold that's set up. And then we came up and broke out and started the whole handle to the cup chart pattern. We came back with a little flag, and it just killed it. Well, now we're sitting here doing a little consolidation, and what I'm looking for is for follow through. Now it could chop around. It can chop around in this area. I don't want it to go past 32.10. Past 32.10, then I'm going to rethink the trade. But as long as it stays above that, it can chop around. Once we get the breakout over this candle's high, what is that? 35.40, something like that. I've got a couple of targets that I'm looking at. I posted this in our trading room today. I'm going to just go to a weekly chart so you can take a bigger picture here. And you can see that bottom that it's built. Nice construction, and we've broken out. And then if we come up here and look at these highs here, that pretty much makes 930 a nice target area, target zone. And then come over here to these lows where you see the battle between the bulls and the bears here. About that 44.90. What I like about that trade is it puts you into that double-digit numbers. The first target, 14% away, give or take a percent or two. And then the second target up here at 30%. Now what I'll do, and I do this on almost every trade, I mean, I could almost safely say 100% probably, is the position, whatever the size of position I buy, as we move up to this target, I'm taking some money. I'm taking 50% of the trade here, and then I'll let it chop around as long as it's still holding a strong, solid chart pattern. Chopping around, there's nothing wrong with it. And then, I guess I should have used green. And the next swing up here would be toward that 1490. So overall, I'm not one for saying, hey, look, I'm buying here and I'm looking for a 30% trade. That's for the second half. So, overall, I may get a 20% trade out of it after I pull the first half in and then the second half in overall. So right now, I think CRE is holding up well. So that would be my trade of the week here, I guess, that I would show you.
Okay, cool. I do like to scale out too, and I keep half for as long as the market moves in my favor. I'm a big fan of that. Let me just pull up a chart real quick. Wrong symbol. I fingered it. This is KEM, and I'll show you an actual trade in a minute. But this is KEM. It actually triggered. I was talking about that TKO pattern. If you kind of squint your eyes, you can see this big bar down, this little shakeout move here, and we look to get long after that day, way back in January, as you can see. And we took partial profit somewhere in here for about a 20-30% move, and then so far so good. It's ran up about 200% since then. So that's the idea, is to trade for both short-term and longer-term gains. You catch a couple of these a year, and that makes your year. And then the rest of the time, you kind of grind it out. I'm not going to try to sugarcoat it and make it sound like it's easy. It's a lot of work sometimes. And sometimes it's hard to follow that plan. In fact, I've got an article on the front page of my website that talks just about that. If you get a chance, check it out. It involves it goes heavily in the trading psychology and even the physiology of our brain. As far as an official setup, one in my trading service just triggered a few minutes ago, and that's DCPH. And it's a good example of an inefficient type of issue that I was talking about just a minute ago. So let me pull it up for you. Unfortunately, and again, you don't want to focus too much on the minutiae because that'll make you crazy. It did spike up and trigger and come back in, but obviously the market doesn't always move in your favor. In fact, more often than not, it won't. But you can see that it's taken off nicely in here. It's pulled back fairly deeply. This is what I call a first deep retracement on IPOs. Could be a wonderful pattern to trade. And so if you wanted to go in on this, your entry would be here. And let me give you a plausible stop for that if I can get the spreadsheet to come back up. Let's see. Talk amongst yourselves. Yeah, it's hidden. But anyway, you could put a stop almost near the prior low. And I know that sounds kind of crazy, but this is fairly volatile stock so far. It can be volatile. A little bit more risky, but with risk comes reward. And I've got plenty of articles where I talk about that. You actually decrease your share size to compensate for the volatility. And the way I look at it is it's better the devil you know. And I also have another report on that. I have a lot of material out there if you guys are looking to get up to speed on some of the stuff. But that would be my trade of the week, DCPH. Dan, we're going to go back to you. You have any closing thoughts about the market, about yourself, or about MarketTakerMentoring.com?
Yeah, thanks. Yeah, this is you talk about grinding it out. That's kind of been a pretty big theme this year, at least for the things that I've been looking at and we've been talking with our students about. The market in general, the broad market, we can certainly find cases where we do see some volatility, but the broad market is, just kind of grinding higher. And can you make a lot of money in a slow, boring, trending market? Yeah, potentially, if you do it right. So I invite everybody to, again, check out that ebook of mine, markettaker.com/ebook, 3 Secrets to Making Money in Any Market, and visit us at markettaker.com. We work specifically with options students. We also have a daily class on futures trading as well, so feel free to check that out.
Cool.
Yep, that's about it.
All right, appreciate it, Dan. All right, Rob, let's go to you. Rob Hoffman from BecomeABetterTrader.com. Any closing thoughts? Market yourself, trading, or your website?
Absolutely. Yeah, I would invite people. Everybody's giving away something to share. I would invite this. I think this is very worthwhile here. If you go to wealth365.com, or because you're here with Crowd Forecast News, so you go to wealth365.com/CFN for Crowd Forecast News. This is great. This is a big event that's coming up here January 15th through the 20th. It's going to have a lot of great speakers. People like the Dan Passarellis, Rick Sellers, and actually, we have Dave Landry himself is going to be speaking at this, and there's going to be a lot of great speakers that are part of this. The names are incredible: Jim Oberweis, Dan Grams, Charles Biederman, Ralph Acampora, Jack Schwager. I think Dave, you mentioned Jack's book earlier, Market Wizards, Adam Esch, Larry McMillan, Stan Freifeld. A lot of great people. Yours truly, me, of course. So many different speakers. We got that sexy man there, Dave Landry. It's so many different people, from all over that are going to be speaking in different areas, not just on stocks, options, futures, forex. But what's really cool about it is it's about all things entrepreneur, business, startup, entrepreneurship, real estate investing, retirement planning, and so it's a really incredible event. So this is completely online. It's 6 days. There's over 60 speakers, and that's growing. And I'm excited to be a speaker, a sponsor, and backing this fully, because this is the wave of the future from our perspective. Going online, avoid the TSA pre-checks, the expensive travel and hotels and everything else. So it's great to be in great company with people like Dave Landry and so many others, and perhaps Dan and Rick will be a part of that. And so many great opportunities with, and so if you go to wealth365.com/CFN, you can go ahead and get signed up. It's free registration right now. So I'd invite people to have that parting gift, and I'll leave it at that.
Cool. We appreciate it. Okay, Rick, any closing? Rick, any closing thoughts? Anything else you want to tell us about HitAndRunCandlesticks.com?
Sure. Let's see. My screen's still sharing here. Yeah. If you go to our website, Hit and Run Candlesticks, we offer a 30-day trial. And here's, you can, I can't really grab the link here, I guess. But 30-day trial to both Hit and Run Candlesticks and Right Way options. Give it a try. Some people always ask, well, why do you charge for a trial? There is a certain, you guys know it, there is a certain amount of administrative cost that just goes with it, and that's all it covers. If you're comfortable with what we do, if you learn something, maybe you take a good trade away. Hey, we're happy with that. It's 100% full membership to Right Way options and Hit Run Candles. You can choose $14 each. You can choose whichever one you want to do, or both. Certainly do both, and learn how we follow price action, support, and resistance. The volatility stop, we use that quite often on our charts, and absolutely focus on trends and price action. Dave, thank you again for having me here. I appreciate your service.
All right, good stuff. I'll have to shorten my link too, take a page out of Rob's book, but right now it's davelandry.com and then timing-research-special-offers. But if you go there, put your name in, and you'll get 4 videos, and then there's also a promo code here, or you'll get a promo code email to you too, to where you could go in and get all 3 of my books. You could buy them on Amazon if you want, or you just get them free off my website using this link. So check it out. Get to know me first. I do a weekly webinar every week that's also on this page called Dave Landry's The Week in Charts, and I'll lecture for up to an hour. And if you can make it through that, then we do look at individual stock picks. It's the format similar to analyze your trade. So bring your favorite stock picks to that, and we'll be happy to take a look at them and see what we think from a trend following perspective. I'll let Dave Kosmitter close the show, but I will say this was a really good show, and I really enjoyed having you guys here, Dan, Rob, and Rick. Great show. Appreciate you guys coming today and taking time out of your busy schedule to be here. And David, let's go to you. Thanks to you again, and thanks to TimingResearch.com and Crowd Forecast News. Thank you, David.
All right. Thanks, guys. Great show. I just want to remind everyone watching Be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. Also, be sure to join us tomorrow night, October 24th, 9 p.m. Eastern Time, for the 9th episode of the new Analyze Your Trade show, where we take your trade or suggestions and talk about those. Fausto Puglisi, Jim Kenny, and Kurt Capra will be here tomorrow night. And I just want to thank my guests again for this week. Dan Passarelli of MarketTakerMentoring.com. First time on the show, so thank you for being here. And also Rob Hoffman from BecomeABetterTrader.com. First time as well for you, so really appreciate you guys being on here first time. And Rick Sadler of Candlesticks.com. Thanks for coming back. And Dave Landry of DaveLandry.com. All right.
Thank you.
Thanks, everyone.
Thank you.